Right. So we're talking about the tips on ledger accounts, how to prepare the ledger, right? This is the case that we have received on 1st of April 2013. Vikas and Vaibhavi have started a business with 5 lakhs and 2 lakhs 50,000 respectively. And with that 7 lakhs 50,000, they started the business, and we have passed the journal entries. Okay, actually we had to pass all the journal entries, but now to save some time, I'm just skipping this part. Okay, just to show you, I have shown you, but I'm skipping this part, and I have jumped straight away onto the ledger accounts. Okay, these are the ledger accounts, and you have seen the cash account. All the, you know, cash inflows are debited and all the cash outflows are credited, right? And what is debited in the cash flow will be credited in that respective account. For example, if you see cash account debit to Vikas capital account, in Vikas capital account, the cash account gets credited. Okay, the cash account gets credited. And similarly, the Vaibhavi's capital account, the cash account is debited with Vaibhavi's capital account. And in Vaibhavi's capital account, okay, in Vaibhavi's capital account, it is credited with the cash of cash account of 2 lakhs 50,000. And similarly, the furniture, when you bought the furniture, cash goes out, you have credited to cash account, and the same is debited to furniture account with a name cash, okay, with a title cash to cash account, right? And you went on like that. Punjab National Bank, Punjab National Bank, okay. In case of Punjab National Bank, there's a cash amount, there's a cash amount that you have deposited. When you deposit cash, Punjab National Bank is taking, right? And your cash is going out. Punjab National Bank debit to cash account, and cash account is credited. Two means this is, it is written on the debit side, but the cash account, this account is debited, but cash account is credited, okay, with 1 lakh, right? And not only that, there's a check that you have received from A1 Pharmaceuticals Company to the tune of 2 lakhs 50,000 as a deposit or an advance for your consultancy services, right? And this 2 lakhs 50,000 also is deposited in Punjab National Bank, and that also is debited. Punjab National Bank debit to consultancy fee 2 lakhs 50,000, right? And in addition to all the cash inflows, you also have some cash outflows. Okay, apart from the cash inflows, you have some cash outflows. What are the cash outflows? You have paid some rent by issuing a check, okay, right? And you have paid some amount by issuing a check for the purchase of the motor car, right? That is 50,000. So the total amount of cash is 1 lakh plus 2 lakhs 50,000. It is 3 lakhs 50,000. 3 lakhs 50,000 is taken on both the sides, and there's a difference of 2 lakhs 85,000 at the end, that is on 30th of, this should have been the 30th of April 2013. And this amount is carried down balance. What is it, carried down balance? It indicates that it's a closing balance. The same is brought to the next accounting period, that is on the first day of May 2013, it is brought. And from there, the transactions continue to record. Okay, we continue to record the transactions after taking this amount. Okay, if you're asked to prepare the accounts for the month of, let's say, May, okay, to balance brought down 2 lakhs 85,000. You just leave it like that. You don't even underline it. Just leave it open, right? So carried down is closing balance, brought down is opening balance. What was carried down in the previous accounting period, what was closing in the previous accounting period, is opening in the next accounting period. Okay, brought down is opening, and brought down is written on the top in your list of items in the account. Okay, brought down is written as the first item for the next accounting period. Carried down is written as the last item in the last accounting period. Okay, right. This is the point where we stop. Let's come to some more items. Now there's a rent. There's a rent. How did you pay the rent? You paid the rent. You paid the rent by issuing the check. Okay, so rent account. Punjab National Bank is credited with rent account. Now, what is to be done in rent account? Let's come back to the rent account. Now, rent account. Rent account is debited with the Punjab National Bank. Now, look at this one. Now, this is the balance of bank, not cash. This is the balance of cash. Balance of bank, cash balance in the bank. I'm sorry, cash balance in the bank. Now let's come to rent. Rent account is debited with Punjab National Bank for 15,000. And then I'll go to the next, maybe to the salary. Salary account is debited to salary payable. There's a salary becoming due to the tune of 15,000 to one person, and there's a salary of, there's a salary of 15,000. All put together is 15,000. I think for one fellow 5,000. Yes, the salary on 30th salary of one person. Okay, for reception 5,000 per month, and for the officer 10,000 per month. Okay, so the total salary is 15,000, and 15,000 is payable. Salary account to outstanding salary. Salary account to outstanding salary, or salary account to salary payable, 15,000. Okay. Now, in the salary payable account or outstanding salary account, you take the reverse step. By salary, 15,000. In salary account to salary payable, 15,000. In salary payable account, by salary, 15,000. 15,000. Okay. And likewise, look at this consultancy fee. Consultancy fee. Now, on 25th of April 2013, we received a check from A1 Pharmaceutical Company, and the remaining balance is to be received. Okay, but it has become due. Consultancy fee income. Okay, it's a 1 million project, right? 1 million consultancy. That's 10 lakhs. So 250 is given and 750 is to be given. Whatever it is, we have an income of 10 lakhs. 10 lakhs. Okay, 10 lakhs. Right. Salary is an expense. Consultancy fee is an income. Consultancy fee is an income. Okay. Now, A1 Pharmaceutical Company. Okay. What is this? A1 Pharmaceutical Company account. What is this? This is a person to whom we have rendered service. He's our client. He's our customer. Okay. From whom we have to receive the money. What is that receivable? 7,50,000. 7,50,000. Now let us come to the loan from HDFC bank account. What is this loan? It's a liability. What is that? It's an obligation payable to HDFC bank, right? So, yeah. What is that you have taken loan for? You have taken loan for buying the motor car. Okay. In the motor car account, Punjab National Bank, 50,000, because that's what the check you have issued. You have an account with Punjab National Bank, and from that account you have issued a check for 50,000, where your account balance, the cash balance in your account, comes down to the tune of 50,000. So motor car account debit to Punjab National Bank, 50,000. And next is motor car account debit to loan from HDFC account, that is 4 lakhs. So in loan from HDFC bank account, what is the writing? The writing is what is debited in motor car account is credited in the, is credited in the loan from HDFC bank account. In motor car account, can you please mute yourself? Yeah, in motor car account. Yeah. Please mute yourself. Vinita, mute yourself. Yeah. So in the motor car account, it is credit, it's debited, right? The same is credited. Where? In loan from HDFC bank account, right? Now you must be getting a question or a doubt here. What is that doubt? You should have a doubt. You must have a question. What is that doubt? Yes, please. It is now. You can unmute yourself and speak. You can unmute yourself and speak. Those who want to speak. Don't you have any doubt here in what all we have discussed? Certainly there should be a doubt.
Total.
Yes, yes. Go ahead, Amdu. You want me to scroll down, up and down for you? Maria.
So there is no total.
Okay, great. You must observe something
Balance
else.
carried down.
There's no balance carried down and brought down.
Correct. Jahnavi says, sir, there is no carried down, there is no brought down. There is no carried down, there is no brought down. Okay. Now, the, the answer for your question is here. Yeah. Now you read. Who will read? Maria, will you read the first paragraph?
Yes, sir.
Please.
Please carefully observe the posting of journal entries into various ledger accounts. Do you see some further calculation in the cash account and Mr. Vikas capital account? What is done is that after posting all transactions to these accounts, the difference between the debit and credit side is calculated. This difference is put on the side with smaller amount in order to tally grand totals of both sides. The convention is to write to balance carried down or by balance carried down, as the case may be. This procedure is normally done at the end of accounting period. This process is called as balancing of ledger accounts.
Next. Continue.
Once the ledgers are balanced for one accounting period, the balance needs to be carried forward to the next accounting period as a running balance. This is done by writing to balance brought down or by balance brought down, as the case may be after the grand totals. This is also shown in the cash account and Mr. Vikas capital account. To the next accounting period as they represent resources and obligations of the business which will continue to be used and settled respectively in future. Balance of nominal accounts which represents incomes or gains and expenses or losses are not carried down to the next period. These balances are taken to the profit and loss account or income statement prepared for the period. The net result of a profit and loss account will show either net income or net loss, which will increase or decrease the owner's equity.
The answer for your question is, this. This is the answer for your question. So why there is no brought down, carried down and brought down for some questions. This is the answer. Okay. This is the answer. Balances of nominal account. Okay. What are the nominal accounts in this example or in this case? You have salary. You have consultancy
Rent.
income, consultancy fee. You have rent. These are all expenses. Expenses and incomes related accounts are all nominal accounts. Okay. So profit and loss account is a nominal account. Okay. And all these expenses accounts belong to nominal account. Okay. So belong to nominal account. Right. Now, if you come back again, yeah, rent account debit to Punjab National Bank. Actually, nothing is there on this. Okay, our practice earlier was by balance carried down 15,000, right? And we take the total 15,000, 15,000. But here, what we write is we write the last day of the accounting period and write here as by profit and loss account, trading and profit and loss account. This is directly transferred to the trading and profit and loss account. That's the reason we don't carry forward. Now, again, let me conclude. The three types of accounts: real account, personal account, nominal account. Now, real account and personal accounts are carried forward to the next accounting period. Real account and personal accounts are carried forward to the next accounting period, whereas the nominal account transactions are not carried forward to the next accounting period, because then and there in that very particular accounting period it has to be closed, because you have to make out the result. And this is called matching concept. You will be matching the expenses against the incomes, and thereby you get either profit or loss. If expenses are more than the income, it's loss. If income is more than the expenses, it is profit. Okay, to make out profit or loss, you're matching. What is that you're matching? Income and expenses, right? So for that purpose, we do not carry forward to the next accounting period. Okay, right. Let's come here. Let's come here back. Okay, for your understanding. Look at this. What is cash? Cash is a real account because it's an asset related account. Okay, look at this. This is closing balance on 30th of April, and this is carried forward to the next accounting period. Okay, on the first day of May, okay, you're writing 6,25,000 as to balance brought down. Brought down is opening, carried down is closing. Carried down is the last item that you have to write. Brought down is the first item that you have to write in an account. Brought down is always shown as a first item to be written only on the top. Carried down should be written at the bottom because it's last item. Okay, now this is carried forward. Okay, let's look at the Vikas. Vikas is a liability account. Okay, it's a capital account. It's personal account, to be more accurate. It's a personal account. Vikas capital account. It's not just capital, it is Vikas capital account. Okay, so his obligation also, this year he is keeping his investment, next year also he will continue, and next year also he will continue. Therefore his balance is carried forward. Now this year this is the cash, and whatever is left over, that leftover cash will be passed on to the next accounting period. Okay, and similarly there's a motor car, and the motor car value is now is the closing value is this, and the same is forwarded to the next, carried forward to the next accounting period. Same thing you do with furniture closing balance, let's say here is 25,000. The same is carried forward to the next accounting period on the first day of that next accounting period by writing as 25,000. Okay, so this is what the difference. To conclude, for the real accounts and the nominal accounts, you have this carried forward to the next accounting period. But the nominal accounts, for the expenses, for the incomes, we don't carry forward. We transfer that to, we carry that to, we divert that to trading and profit and loss account to make out the profit or loss. Okay, right. Now, yeah, I want, uh, Abdul Rahman Jahnavi Gupta to read this. In the above example,
Yes, sir.
yes,
Yes. In the above example, please note the balances of rent account, consultancy fees account, and salary account will not be carried down to the next period, but to the P&L account of that period. As illustration, we have shown it for rent account. We have seen how to balance various ledger accounts. It can be seen that while some accounts will show debit balance, while the other will show credit balance. Is there any relationship between the type of account, whether it is an account of asset, liability, capital, owner's equity? incomes or gains, expenses or losses, and the kind of balance, debit or credit, is it should show.
Yeah, and finally, we'll have a doubt whether a particular transaction is to be debited or to be credited. You may be perplexed. You know, if at all, if you're perplexed, confused, confounded with a particular transaction, whether it is to be debited or credited, please remember all assets accounts are showing debit balance. Debit balance in the sense, okay, look at this one. Like, look at this. Debit balance means debit side of the account should be more than the credit side. Look at this cash account. Cash account debit side is 7,50,000. Whereas, you know, this is balancing figure 625. Don't look at that. Okay, you have dropped this amount to make it equal. But actual total is 1 lakh plus 25,000. 1 lakh 25,000 is the total on the credit side. Whereas the debit side total is 7,50,000. Therefore, the account is showing a debit balance of 6,25,000. A debit balance of 6,25,000. Okay. The account is showing a debit balance of 6,25,000. It doesn't
Sir,
mean, yeah, it doesn't mean because you're writing on the credit side, sir, it should be credit now. No, it is not like that. You know, whichever side the account is showing more balance, we say the account is showing that side balance. In this case, the debit side is more. So the account shows, we say, the account shows a debit balance of 6,25,000. Okay.
yes, sir.
Yeah.
Sir, I just wanted to ask one thing.
Yeah.
In the assets account, like this is the cash account is an asset account, right?
Yes.
So for every debit, there is a corresponding credit, right?
Yes.
But why is the debit balance more in the asset account?
Yeah. When you're taking a transaction, the transaction is two-folded. For every debit, you know, the transaction has a debit and a credit. Okay.
Sir.
A transaction has a debit and credit. But when it comes to the account, yeah, the account may show more debit. Yeah, can you mute yourself? Your voice is coming. Mute yourself. There's a more debit on the, you know, debit side. Sometimes there's more debit on the credit side. Okay, there's more. I'm sorry, there is a higher balance on the credit side. Sometimes higher balance on the debit side. Right? So an account can show either debit more or credit more. It need not be equal always. What I mean, it can be equal. Okay, it can be equal, but it need not be. But we make it equal by putting a differential amount. And that's called balancing the account. That's called balancing the account. Right? Please don't misunderstand. A transaction has two effects. I'm not saying about the account. A transaction has a debit aspect and a credit aspect. Okay, but an account, you know, you had to separate, detach. Don't mix this with that. An account has, you know, in this case, debit balance. That is, debit side is more than the credit side. Now, in case of Vikas capital account, the account shows credit balance because credit side is 5 lakhs and on the debit side, nothing. Okay, nothing is here. There's nothing. It's zero. But you have dropped this amount to balance the account, to make both the sides equal. You have put this 5 lakhs and said this is balanced. This is balanced. Okay. So account can show debit balance or credit balance. Debit balance means debit side more. Credit balance means credit side more. You may get a temptation to call, okay, to call the balancing figure, you know, whichever side you're taking balancing figure, that balance you may call. Let's say the balancing figure here is 6,25,000 on the credit side. You have a temptation, the non-commerce particularly, you have a temptation to mistake that the account shows credit balance because the balance is written on the credit side. No, it is not like that. Just because you're dropping on the credit side to balance the account, don't think that the account is showing credit balance. It is showing debit balance. Okay, right. Next, let's come to here. All assets accounts show debit balance, means debit side is more than the credit side. All liabilities accounts show credit balance. All liabilities accounts show HDFC loan account, loan from HDFC account. Look at this. On credit 4 lakhs, on debit nothing. Okay, so this is proved. All liabilities accounts show credit balance. Credit side is 4 lakhs, debit side nothing. And you may say, sir, when we pay, we go on paying that loan. When you pay all 4 lakhs, there is a question of account. The account is closed, right? As long as there is an account, it shows only credit balance. Then same thing with capital account also. You can just check the capital account. Yeah. Look at this. We cost capital account. All capital accounts show credit balance. Credit side is 5 lakhs and debit side is 0. And you have put 5 lakhs to balance the account. Okay. Right. Now, yeah, all expenses accounts show debit balance always. All incomes accounts show credit balance always. Look at this one, these rules. All assets accounts show debit balance always, not sometimes. All liabilities accounts and capital accounts show credit balance always, not sometimes. All expenses accounts show debit balance always, not sometimes. All incomes accounts show credit balance always, not sometimes. Okay, always these balances are true. Just keep this in mind. Whenever you do whenever you're committing mistake, you can immediately rectify if you remember these things. Assets account always show debit balance, but my account is showing credit balance. That means whatever I have done is wrong. Somewhere I have put wrong figure in this account, therefore it is showing credit side more than, because you have already learned that assets accounts always show debit balance. And similarly, capital account cannot be showing, it will not be showing a debit balance. But if it is showing, you can just get back. Okay, it shows only credit balance. The credit side should be more, right? Remember all these 2 points. And what's the time left over?
More 10 minutes, sir.
More 10 minutes. Okay, ma. Let's continue.
No, sir. 6 minutes, sir.
Okay. All right. Next, closing and opening balances. We have already, I think, yeah, our friends have already read it. Once again, to reiterate. Yeah, who will read it? Who will read it? Somebody?
I will, sir.
Yeah, please. Who is this?
Closing and Sabrina.
Sabrina. Yes, go ahead.
Closing and opening balance. The debit or credit balance of an account that we get at the end of the accounting period is known as closing balance of that account. The balance of the nominal accounts is closed by transferring to trading account and the profit and loss account, which shows the net operating result, net profit or net loss.
Right.
The balance of the personal account and real accounts representing assets, liabilities, owner's equity are reflected in the balance sheet, which shows the financial position of a business on a particular date. These balances are transported as opening balance in the succeeding accounting period.
Correct. Go ahead.
Some terms used: casting, totaling, balancing.
Enough.
To find that.
Enough. Thank you.
Yeah.
Yeah. Look at this. There may be some short questions in the examination. Okay, half mark questions in the internal exams. Casting. What is casting? Totaling. Casting is totaling. Taking the total of the account is casting. Balancing. You have seen the act of balancing. No? When one side is more, the other side is less. What do you do? What do you do? You take the difference amount and fill there. Now, generally, when parents see, if a parent, father or mother has 4 children, and in that one fellow, the youngest fellow, is not, he is not settled. What happens? They'll take money from all these three fellows who are working hard, and this fellow has less salary. They'll take the salary from little pocket money. I need for medicine, I need for that, I need for this. Parents take money from the well of three fellows, and set off the budget deficit of the fourth fellow. The budget deficit, this fellow gets only 20,000, the rest of them get 1 lakh, 1 lakh. So what she'll do, she'll take 10, 10, 10, 10,000 from the remaining three and try to set off the gap in the budget of that fourth fellow. Okay, that's balancing. All parents do this. It is no exception, right? So balancing act. Now, balancing is to fill the gap between both debit and credit side. Okay. Carried down is the short form of CD. Short form of carried down is C/D. Short form of carried over is C/O. Carried forward, C/F. Okay, right. Now, subdivisional ledgers. The total ledger is divided into two types: personal ledger, impersonal ledger. Okay, they are divided just like this. Okay, personal ledger and impersonal ledger. The personal ledger is divided into two again: the debtors ledger and the creditors ledger. And the impersonal ledger is broadly divided into two: cash book and general ledger. The general ledger is divided into nominal ledger and private ledger. Let me tell you about the, debtors ledger. All the people, customers who take money, who purchase goods from us on credit or debtors. Okay, and we maintain a separate book to account for the goods that they are taking on credit. That's called debtors ledger or debtors book or receivables book. And creditors ledger. What is this creditors ledger? As we are selling goods on credit, we also buy goods on credit. So we have to make account of all those credit purchases. Okay, all the credit purchases are maintained in a book or a ledger. That's creditors ledger. And all the cash transactions are maintained in a book called cash book. Okay, and cash book has three types or four types to be more particular specific. There's a single column cash book, double column cash book, triple column cash book. Single column cash book, only cash column. Double column, there's a discount column added along with the cash column. There's another column, triple column cash book. There's cash column, bank column, and discount column. In addition to these three, you have one more book called petty cash book. So this is all about cash book, right? Then general ledger is again divided into nominal ledger and private ledger. Okay, it's like this. All this we have discussed or here. Okay, yeah, it's all here, right? Now we will close here. Any doubts? Any doubts? We will continue in the next class. In the beginning of the next class, you can ask me the doubts.
Sir, this video will be uploaded to Moodle, right?
All videos are there on the Moodle. Okay, or
Okay.
you can, if you don't have time, if you don't have time to log into Moodle also, or if you forget the Moodle, if you forget also, what I say is, if you forget on the Moodle,